Let's now talk about sales tax. We have mentioned this particular sales tax or VAT, value added tax, early on, and I said we will go back to the same topic. So in sales invoice we checked was without VAT, and I said if you have VAT, you will need to add extra checks when you look at the sales invoice or purchase invoice. Because when your sales, it can be a bit complicated when to register, but ultimately over 90,000 on historical 12 months, if your business sells over 90,000, you need to register for VAT with the government, and tax office will give you VAT number, which you need to quote on your invoice. You need to quote also on invoice the rate that you applied and VAT amount you are charging. And it goes both ways. It goes for the purchase invoices and it goes for sales invoices. So if your customer is registered for VAT, you need to quote the VAT invoice, VAT number as well on sales invoice. And ultimately, sales tax is a percentage based on the total of the invoice. Percentage will depend on the type of goods and services you deliver and is stipulated by the government. I provided a few links directly to UK Gov website, and here you can find information about the sales. If you're in any other country, it's the same story. You need to make sure that you register once the threshold is reached. So this add-on on sales invoices is called output sales tax. We as business add these invoices onto our sales and we pay this tax to the government, right? So we pay this to the government on behalf of our client through the sales invoice. However, when we receive as a business sales invoices, we pay for electricity, for rent, for telephone, for whatever expenses we pay. And if there is a VAT added to us, we call it input sales tax, and we reduce our output sales tax. So basically output less input, and the balance we have to pay to the government, or we reclaim from the government. So let's make a small example here. We sell goods for £50, very simple, £60 in total, 20% is standard VAT in the UK. We have purchased stock from warehouse with 25 plus VAT, so we paid £30, and we need to calculate the difference. So we have £10 that we need to pay to the government, output tax, remember, and we have £5, which is is our VAT on purchase. And the difference is £5. This we need to pay to the government. If our input VAT would be higher, we will have a reclaim value from the tax office. So last but not least, let's have a look how to record it. I've made it quite simple. Again, on a sale, we have received cash for £60. Our payables increased to 50, but we also have a tax that we need to pay, which is 10. I'm using the same example as previous slide. 50, 10 is VAT, and 60 is a cash. 60 cash, 10 tax, and 50 for sales of goods. Purchase side, we have a little bit opposite direction. So we have credit cash, so we have paid, we decreased our cash in the pot. We have purchased item, and we also have purchase tax. The tax account doesn't actually belong to us. It's something we have to either pay or reclaim. So let's have a look at the net tax payable. We have 5, which is the difference between these two. And we have a cash account, which we pay for £5. So this would be a manual journal when we need to pay £5 as a difference between output and input. Let's recap part 3. I know we ran through this quite briefly. and it's Introduction to Bookkeeping course. So I tried to cover as much as I could without going really into complex transactions. I hope this was really useful. We have covered business transactions, so we know about sales and purchases. We have covered sales, purchases, inventory, and fixed assets. And we also talked about value-added tax, which I think is very important since a lot of businesses are now registered for VAT or sales tax. And if you have any questions, you're more than welcome to contact me. Maybe it's about debit and credit. Maybe you have extra questions about sales, or maybe you would like to learn more about Xero QuickBooks. But whatever it is, do remember Dealer. It will really save you time and you would really understand how it works. The way I use Dealer is that I think about transaction this way. I look at the cash and I say, what is this? It's an asset. Okay. So what happens to this cash? It has increased. So we sold, we got more money, right? So I go back and I said, okay, so it's an asset. It's increased. It's a debit. And if you remember, we had a sale, so it's revenue. And we increased our sales, so we got more sale. We got more sale, therefore it's R for revenue. We are on the credit side. And that's how it works. If you think about first what type of major account this specific business transaction is, split it into debit and credit. You can write it down on a piece of paper and then decide which side to use and ensure it balances off. I really hope it was useful. Thank you so much for joining this course. Any questions, let me know in the contact us link, and happy bookkeeping. Thank you.